Hi everyone and welcome to TOOP TV, and a great show it'll be today, a winter show. At the start of the show we're talking about the end of financial year and the impact on investors and what to do. Also, speaking of money, how to optimise the sale of your property through presentation. And for those of you that are looking at gorgeous property, SA Finest, we go to the country and have a look at Balhanna. Don't forget we're live and interactive, so get the calls going, or get the emails going, we'll answer the questions at the end of the show. Well, welcome everyone. It's been really chilly the last couple of days, and today a bit of sunshine, which is terrific. Now it is also that time of the year, that the end of the financial year. It is in fact the 30th of June today, which is a momentous time for accountants and so on. And later in the show, we'll be running through some tips with you, and also the monthly rental update, because the rental market's been pretty amazing. And we're also going to cross right now to Jen Drew and see what the latest is in the headlines.
Since last week's show, a lot has been happening in our headlines. Our Socceroos got over Serbia, but it wasn't quite enough to keep their World Cup dreams alive. Locally, the proposed Adelaide Oval redevelopment is well and truly remaining in the spotlight, and of course, literally overnight, we saw the demise of Kevin Rudd's political reign and the swearing in of our first female Prime Minister, Julia Gillard. As for finance and property, it will come as no surprise that the end of financial year is really dominating the headlines this week. This Monday's Your Money Lift Out in the Advertiser was an absolute must-read for property investors, with a look at maximising your return, plus an outlook for the remainder of 2010. For those focused on the commercial real estate sector right now, it appears high-profile properties are attracting a lot of keen interest from abroad, especially throughout Asia and Europe. And to finish off on a slightly quirky note today, ugly construction sites around Adelaide could be given a cool, money-making makeover. Temporary inflatable iceberg structures may be introduced to cover up vacant sites and host events such as art exhibitions, while making a little extra money for developers who were impacted during the GFC. You never know, that could actually work.
Indeed, those articles on Monday Money were really interesting. And of course, this time of the year, there is so much news about money and finance. Just before we go to our guest, don't forget we are on the iPad and on the iPhone, so be sure if you have those devices to get them going right now. So finance is what the week's about. The Director of Finance and co-founder of TOOP+TOOP and first-time person on TOOP TV, Sylvia Toop. Welcome, Sylvia.
Hi, how are you going?
Good. Now, Sylvia, you've got two tips specifically for property owners for this time of the year. There's a few hours left in the financial year.
That's right. You know, it is the 30th of June today, and just a couple of things that will be great for you to get in order before the close of business today. First of all, make sure you have all your invoices in today, dated the 30th of June, so that you can claim them this financial year. And secondly, it's a good time to round up all your statements, receipts, invoices for the last 12 months, get them all in order and ready to go, so you can lodge them yourselves with the ATO as soon as you can, or through your accountant.
Graded. No. Yeah.
That's no, and so you'll get your refunds much quicker than if you left it for another couple of months.
It's all about getting the money in, isn't it?
That's right, yes.
Now, also speaking of money, one of the parties that advised to the Reserve Bank, RP Data, these are the guys that give advice that the bank then decides whether we have cheap or higher interest rates, put out a report that arrived only about an hour and a half before the show began. So we moved things around very quickly, and we're very lucky to have the Director of Research on the line with us to join us today, and we have Tim Lawless. So welcome, Tim.
G'day, thanks for having me on the show.
Now Sylvia's got a start-off question for you.
Hi Tim, how are you going?
I'm really well,
Good.
How are you?
Now, I just want to take something from a quote from the report today that says that there are lower auction clearance rates, fewer housing finance commitments, and the weakening of consumer confidence. How is that going to impact the market?
Well, obviously auction clearance rates don't impact on the Adelaide market all that much, but all the other factors, we're seeing fewer housing finance commitments in the marketplace, particularly for owner-occupiers. We've seen owner-occupier commitments, which means there's basically fewer loans being issued by the major banks. Basically, that's a real good lead indicator for how much new demand is coming into the market. And with consumer confidence, that's another really important indicator, because this particular index really tracks how confident Australians are in the short to medium view of the economy. And generally, when confidence is very low, we find the number of sales in the market is very low also. And when confidence is high, the number of sales in the market is also very high, which sort of goes without saying. When you think you're going to have a job, and when you think the economic conditions are quite buoyant, it's quite a much easier decision to make a high investment or high commitment decision like buying a house. But obviously the opposite's true also.
Now, Tim, the report was covering off on an issue that I've always struggled with, and I just quote you, the market's underlying fundamentals are such that any material fall in home values is unlikely. I continually have people saying, and on the blogs, saying we're about to see a 40% drop in prices. You've covered this incredibly well in this report. Can you cover that?
Yeah, absolutely. And you always have a lot of overseas commentators, or even domestic commentators, suggesting that Australia is in the midst of a property bubble and that we are likely to see a significant decline in prices. We certainly aren't of the opinion that is what's going to happen. What we are probably going through now is we've recently seen a very strong growth phase in Australian property values. Adelaide values the last year were up about 10.5%. Nationally, values are up 12%. Okay, but over the last 5 or 7 years, the growth rate nationally is much lower. It's around about 6 to 7% year on year, which coincidentally is tracking disposable household income growth as well. So when we see these comments that, for example, Australian property values are about 7 times the national income, well, that's completely untrue. The actual ratio is around about 4% when you look at a national median price multiplied by or divided by a national median wage. So I think the talk of a population or a house price bubble is certainly quite unfounded, particularly when we also have a country like Australia, which is going through an absolute population boom. We still have an undersupply of housing. We have a very strong economy, particularly compared to other OECD nations. GDP growth is certainly picked up and very strong. Unemployment's down to 5.2%. And it's peaked much lower and much earlier than anybody would have expected. So with all that in mind, I think what we are looking at now is probably a return to more sustainable levels of growth, and that was something that was certainly on the cards for some months after such strong growth.
Now, Tim, two other things. We've a bit short of time, but I just really need to hear your thoughts on interest rates. It's covered in the report. Just your personal thoughts. And the second thing, the Gillard factor.
Well, interest rates, probably some good news there that we are looking at probably a fairly consistent level of interest rates now, at least until 2012. When we look at what the ASX is suggesting, or the yield curve there from the ASX futures market, they're factoring in one further interest rate rise between now and the beginning of 2012. So some good news there is that we're likely to see interest rates remaining quite flat. With the Gillard factor, well, in some ways it is good news that we are seeing some work towards resolution of the super profits tax. There's a bit more certainty in the market, and also, regardless if you're a Liberal or a Labor or somewhere in between or left of centre, I think the good thing is that we are seeing some certainty, and particularly now that we are getting closer to an actual election date, because things certainly do slow down when we don't know when the election is going to be. So I think we need to get that over and done with, and then move on. And I think having some certainty there is certainly a good positive.
Tim, that's been absolutely sensational. There is another report put out just 2 days ago from one of your counterparts there at RP Data, which we have posted to our blog site as well as this one today. Really interesting reading. We haven't got time to cover that off at the moment, but thank you so much for your time. We look forward to speaking to you again in a couple of weeks.
Always a pleasure. Thank you.
Thanks very much, Tim. Now let's, Sylv, go behind the blinds and look at some magic property. We're going to get rid of that. Look at some magic property that we've got on the market and some tips.